Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Okay guys, welcome to webinar number 3. Our next one I'm going to introduce you guys pips, lots, leverage, order types, and stop losses. Okay, that's going to be an important one, probably tomorrow or Wednesday. We're going to do that one. I'll give you guys a heads up. And we've already done webinar number 1, Introduction to Candlesticks Characteristics. This was open, high, low, close, and time frames. That one will be uploaded on the website, and you'll have that access to that one. And then we also have right here, we've got the bullish family we've already done. We did that one last week as well, and that one will be uploaded. But tonight we're going to learn all about the bearish family, okay? So they're the exact opposite candles from the bullish candles. They do have different names, but we got to understand which ones are the more important ones, which ones are the less important ones, which ones are the ones that are going to make us money. Those are the ones that we got to learn, okay? So we're going to start off with here, course 3, the bearish engulfing candlestick. Remember, the most important bullish one was the bullish engulfing. The most important bearish candlestick, the money candle, is our bearish engulfing. So let's get into this. Let's break this candle down, okay? So real quick, I'm just going to read this to you guys. A bearish engulfing pattern is a technical chart pattern that signals lower prices to come. It is a large-bodied red candle that completely engulfs the full range of the preceding green bullish candle. So that's where all the sellers take out the previous buyers. So if we break a support level, the momentum is to the downside. The probability is it's going to go down further with more selling pressure, and we get into a sell, or it's a continued sell, and we're making money to the downside. The larger the body, the more extreme the reversal becomes. The body should completely engulf the preceding candle after an uptrend of 3 or more green bullish candles. So when we identify these, we want to locate these where we're getting a little bit of a correction, like a pullback. It's going up 3-4 green candles, then it's reaching a lower high resistance, and that's where we want to spot that bearish engulfing candle, because that's where it could continue the downtrend. Okay, if you find these candles in an area of consolidation, then we don't necessarily look to trade them, because they're just going to be head fakes. We want to identify these on like uptrends. So I'll get into that. I'll explain how that works. And here we are. So this is going to be the bearish family. I'm going to get into this. So I'm opening up the tutorial. I'm going to pause it and I'll talk about it. And then you guys can review these on your own. Okay, so right here. This is where we have, guys, let me know. You guys can see the screen, hear me, everything's all good. This is the bullish candle, okay? So we've got a bullish candle. Remember, bullish candle open at the bottom and they close at the top. They've got a high wick and a low wick, representing the high and low. Now, when we get a bearish engulfing candle, it's the continuation candle off of this one. See where the bullish one closes up here? This is buyers, right? They push it from the bottom, they come up here and they close it right here. Our next candle continues off of this candle. And now when we start to see like they gap it up red, we're starting to anticipate that maybe the market makers are pushing it up to pull it down. They want that increased selling pressure, or it can open right here, right exactly where this one closed. It can open there or a gap up. And now you're watching how high can it go up to. So if it has a little to no wick on the top, that means that selling pressure is heavy. It's coming in quickly and it's coming down. And when we start to engulf this entire green candle, like right there, you see this red candle engulfs it. We've taken out all of these buyers out of the time frame. So now there's nothing but downside to go to. So once we lose the low right here, then we could see it push down further. Okay. So this is our bearish candle. A bearish candle opens at or above the previous candle's close, like we see here. And then the length of the bearish candle engulfs the previous green candle, okay? So we can see that it engulfs this entire green candle. That's what makes it a bearish engulfing candle. Okay, and we look for it to close. It has to close below here, okay? And then that's what completely engulfs it, because it can come down and pick up a wick and go right back up. Then it's not a bearish engulfing candle. In order for it to be engulfing, it has to close and open and close and take out this entire green candle. We take out all those buyers, essentially. That's what's going on, okay? And now the sellers have the momentum. There's more sellers in the market than there is buyers on that particular time frame you're trading. And remember, this candle can be a 1 minute candle, 5 minute, a 15 minute, 30, 45 hour, 4 hour, daily, whatever, okay? They all have the same characteristics. A bearish engulfing candle opens up, gaps up, or opens right here, comes all the way down, engulfs this candle, and we completely close below it. Okay, we've taken out those. Now what we're looking for is continuation off of this candle to the downside, where we could possibly get into another trade, another sell. Okay, so the bearish candle closes below the previous candle's open. So that's a bearish candle, how it's forming, bearish engulfing. Okay, so real quick right here, bearish candle is sellers, okay, as bullish was buyers. So A, B, C, D, follow it. A right here, we have the real body. This is the open. It can go up to B, which it represents the wick, the high of that time frame, but it doesn't stay up there. We have selling pressure, which pushes this big real body all the way down to here, C, where we make a low of the time period, but it doesn't close there. It comes right back up and then it closes right here, okay? D is our close. So A and D, open and close, represent the real body, this big red volume, that's the body, okay? That's where all the money is, guys, the selling pressure. And then the high wick represents the high of the trading period, and then the low wick represents the low of the trading period, okay? But you have your open and your close here. And this is bearish. Bears in the market are considered sellers, okay? Real simple. Okay, so this frame right here, this is a bearish reversal pattern. This is where we want to spot these bearish engulfing candles, okay? Because we're looking to reverse an existing pullback or like an uptrend, okay? We're looking for it to reach maybe a higher time frame resistance, and we're looking for our candle for confirmation for entry onto the sell, okay? So what we're looking for is this technical chart pattern. It's an engulfing pattern, a bearish engulfing. It's a reversal pattern, and it's a sell zone. So here we could have, maybe this was like a higher time frame downtrend, and this is a small pullback where we're getting some green candles coming in. And remember, you don't want to get faked out by these. So if you're not comfortable with counter trading, then allow the pullback to happen. And then once it reaches a level of higher time frame resistance, so this is where Dave and I use a higher time frame, like an hourly 4-hour or daily. Once it starts getting up here, this is where we're starting to look for and identify the bearish engulfing candle before it even happens, so that we can anticipate this and get into a sell. So see here, green candle, this one they gapped up, starts coming down. Right there, we've engulfed it and then it closes. So that's confirmation number one. Clue number one, that we've taken out these buyers. We have a strong bearish engulfing candle and we can anticipate further probability to the downside. So then we're looking for this candle open. There could be draw when it comes back up, but then what we're looking for is a wick to be below 50% of this red candle so that we have enough momentum to keep pushing down further. And then depending where your entry is, when we teach you guys sniper entries, we can get you guys into entries up here, selling up here, have your stop loss place up here, and you're profiting on this bearish candle. But if you don't feel confident or comfortable trading like that, then just wait for confirmation, let this candle close, and then we're looking for entry number two on this candle. This one with let it have its drop, retest. Once it starts getting rejected and it breaks the low right here, we could get into a sell, place stop loss up there, and we could continue to ride this. And all we need is one more red candle to break the low of this candle, and then we could start dropping further for a nice 10, 20, 30 pip drop, okay? So we love to look for these at areas of pullbacks or uptrends. If you see a bearish engulf, and I'll go back to TradingView, I'll show you guys. If we start to see these developing in an area of consolidation, we don't trade them, okay? It's just gonna be head fakes. So we'll show you where to identify them. Okay, so here's an example here. A, B, C, D, E. This is the bearish engulfing candlestick pattern. Okay, so you can see we have A. We've got a level of support here. And then we got buyers coming in where it's pushing this nice big bullish engulfing candlestick that we learned last week. And look at this, could be like a buy entry, and we have a bullish uptrend going all the way up here to C, where we now have a resistance level. Okay, and these are 5-minute candles. This is GBP USD on the 5 minutes. And now we have identified maybe it's a higher time frame resistance. This could be like an hourly, a 4-hour resistance, maybe a daily resistance. So we got to expect maybe some selling pressure up here. Okay, there could be some order flow up here. There could be supply up here. Banks could have sell orders placed up here. If we don't get enough momentum to break up here, we start to get these rejection wicks. There's rejection wick number one. Here's a rejection wick number two. And then we get this bearish engulfing candle. Look at it. It comes all the way down and it closes and engulfs this entire green candle. That's the bearish engulfing pattern. And now you could be looking to enter on this candle as it's forming when you guys really learn price action. But for the new traders, you're looking for entry on this candle with confirmation. So let it have its drop. Once you start seeing it getting rejected and we break the low, sell entry, stop loss place up there, and you can start profiting on all the way down. And then look, you get a small pullback here. You got a spinning top candle, indecision, it pulls back, but then look, you continue the bearish continuation. We get right here, you mark your resistance. It's a lower high from up here. So we got to still respect this downtrend. And then you get these bearish candles coming down, break that support right there, and this drops down further. So on the initial play, guys, you can, when it goes down, we advise you guys to take out 70, 80% profits on this play right there, and then leave a small runner with a break-even stop loss. So your break-even stop loss could be like right here or here. And then if there is a pullback and it continues to go down like it does in this case, then you're going to profit even more on that runner. But on an initial move like this, if you get in there and you grab 10, 20 pips, start to scale out a little bit, okay? Because we'll always find trades, but it's good to grow your account, guys, by grabbing some profits along the way, okay, when you're trading. Because sometimes they'll reverse and they'll come right back up to where you bought in, okay? Okay, so let's watch this, how it's forming, okay? So did you see that, how this candle came up and then it turned into like a shooting star candle? It came shooting star and it went bullish, okay? So we're starting to see that there is some selling pressure represented by the upper wick. Then we're looking for this candle. So this candle comes down and closes and engulfs, okay? So then we could be looking for entry on our next candle, okay? So next candle right here, we follow it. How does it open? Okay, so there's the open. It opened, very, very small push to the top, okay? Because you can see there is buyers trying to push it up, but there's a lot of selling pressure coming off of this bearish engulfing candle. So we can take like a sell here, place stop loss anywhere you like. If you like it to be in the mid level of this candle, above the candle wicks, that's all personal preference. But this is a good risk reward trade to take. You're off of a bearish engulfing candlestick, off of a pullback, and then you're looking to profit on these candles coming all the way down, okay? And then this is the family, guys. This is what I'm going to introduce to you guys, okay? So this is the bearish family. Just like last week, we did the bullish family, okay? So these are the candlesticks that you want to get to know, and there's some that are more important than the others, okay? So we have on the left the most bearish, going to the right, which are the least bearish, okay? And then this is the bearish family. So what we're looking for is A, the one I just introduced. This is the bearish engulfing candle. And why is it called engulfing? Because it's filled with bearish selling volume. You can see that it's completely filled, like it's filled. So if we have a green candle and we take them out, we have a lot of selling pressure pushing down price. So we could continue to feed off of this and go continue to the downside where we can collect more pips, okay? And then our second most important bearish candle, our bullish one was the hammer. This is like the opposite of a hammer. It's called the shooting star candle, okay? And this is a trend reversal candle. So this was a green candle which came all the way up here, but then when it reached a level of resistance up here, it started to get rejected. Oh shit, let me just go back. It started to get rejected up here. Okay, so when it got rejected at this resistance, then you start to see this wick form. And the longer the wick, the bigger the rejection, okay? And these candles are normally 2 to 3 times the size of the body, these big rejection wicks. And then it comes down and the volume closes at the bottom. That's why it's called like a shooting star candle. It's coming down. So then we could expect continuation to the downside. Our next candle would probably open here, maybe a small pullback, and then we'll see it go down further. So this is our most bearish candle. This is our second most bearish candle, the shooting star. And I'm going to introduce those individually to you guys, okay, on tonight's call. And then we have this bearish harami candle. This is more as a neutral candlestick, but you can see the volume inside the body of the candle. It's still large volume. It's more than 50% of the candle range, okay? So it is still considered bearish, and we can take trades off of these, but we need to use these more with confirmation, okay? Because we do have a long wick to the top that got rejected, and we also have a small wick at the bottom that got rejected. But the volume is in the middle, okay? And then we have this candle D, which is a bearish pin bar. It's a trend reversal candlestick. It's similar to this one, the spinning top. The only difference is this one, the volume is below 50% of the candle. So you're looking to be about 2/3 to the way to the bottom. So you can see that the selling pressure is lower at the bottom as it is to this spin top candle. So price action opened up, and we went bullish all the way up here. We got level of resistance, and then sellers pushed it all the way back down here. But then near the end of the candle, we had some buyers came up and closed it right here. But the volume is below 50% near the bottom. So this is giving us an indication that the sellers are starting to reverse the trend, but it's not enough volume for us to take a trade. We don't take trades off of these candles. We like to take trades off of these ones. These ones are just giving us clues that a reversal or trend continuation could be happening. And then we have this one, the spin top. This is a complete indecision candle, 50-50 neutral candle. You see the volume closes right basically where it opened, right in the middle. This had some volatility. Buyers pushed it all the way up here. Sellers pushed it all the way down here, but then it closed right in the middle with some bearish volume, okay? And then F is our hanging man candle. This is the opposite from our inverted hammer that we had on the bullish spectrum, but this is now called a hanging man. So what happened with this candle? We opened up here, okay? So remember, it opens here, and it came all the way down. So this candle looked exactly like this bearish engulfing candle, but we never closed at the bottom. We probably reached a level of support, maybe on a higher time frame, hourly, 4-hour, daily, and then we had buyers start to push it up all the way where it got rejected all the way up here and closed here. But we do still have this selling volume, okay? But this is why it's our least bearish candle, like on the spectrum, because we have a big rejection on the bottom where we got a lot of buyers coming in, okay? But it still finishes with a bearish body. So we got to respect that. It's still some sellers in there, but it's not enough for us to take a trade off of. We need additional confirmation bearish candles. We're looking for like a bearish engulfing to come after this, or like another rejection candle, a shooting star. And then these two are of least importance. You have your doji candle, which is indecision, G right here, and you can see it's a small range, okay? So the range is not that big. It has an open, a high right here, a close, and then right here it closed. So it virtually opened and closed in the same spot. Not much range. We don't trade these candles. They're just giving us clues that maybe the trend is going to change. That's about it, okay? These are the more important candles over here. Okay, and then we get this one, uncommon candle. You guys might see these. These are called gravestone dojis. The bullish one was the dragonfly. This is the gravestone. So what happened with this one was that price action opened right up here. It was bullish. It came all the way up, but then it reached a level of resistance up here, and that's why we got this wick formed at the top. We have a lot of selling pressure pushing it back down to virtually where it opened. But you see there's no volume in this candle. It's all exhausted. It's like it's extinguished, you know? So we can't take trades off this, but it's giving us a clue that that direction is changing to bearish, and now we're looking for a continuation candle. We're looking for one of these candles, okay? So I'm going to break down now these candles individually with you guys. Welcome to everybody on the call, everybody else on the call. So we just got started, guys. I'm breaking down the bearish family. Last week we did the bullish family and the introduction. They're going to be uploaded to the website for you guys. But we're going to get now into breaking down these candles. So we just did the bearish engulfing. Let's do now, guys, the next one, the shooting star candle, okay? So this is our second most important candle. This is, if we're getting in selling pressure, these are the ones that we're looking to take trades off of, okay? These are the candles we want to identify and make some money on, okay? So I'm going to introduce these ones to you right now. If you guys got questions, I got the chat box, and also if you want to unmute your mic and you got a question, go ahead. It's interactive, guys. You guys can ask anything you guys want. Okay, so this is the shooting star candlestick, okay? Look at what it looks like, okay? And I'm gonna explain what's going on this, okay? So we have the open right here. Remember, the red candle opens right here, and we had buying pressure that pushed this candle all the way up. It came all the way up here where it made a high. That's represented by the high wick. And then we have selling pressure now pushing it down where it closes at the bottom. So this is why it's called a shooting star. It came up and then it goes all the way down. This is our second most bearish candle because it's getting heavy rejection up here and pushing down the close down here. So this candle, we can expect maybe some continuation to the downside. We could take a sell entry, place a stop loss possibly above this wick, and we ride this momentum down where we catch our pips, okay? So I'll show you guys all this, I'll even go to live trading. I'll show you guys how it looks on TradingView, but these are the candles that we're looking to trade. These bearish engulfing, shooting stars, these are money candles, guys. All the other candles, if they're in consolidation, we don't trade those. These are the ones we're targeting, okay? And this one is stronger with little to no lower wick. See this one, how it's got no lower wick? All of the pressure is at the bottom. So next candle can open right here and continue going down bearish, okay? So this one is second most bearish. It's represented by a high wick, but it's got little to no wick on the bottom, and it looks like an upside down hammer candle, okay? So let me just break this down a little further for you guys right here, okay? So this is when we're looking to catch these guys, okay? We want to find these. It's a shooting star reversal pattern, okay? So it's a technical chart pattern. It's a reversal pattern. It's a rejection candle. The wick we're identifying should be 2 to 3 times the size of the body. That means it's more, it's more aggressive. It's a bigger rejection. So we can expect more selling pressure. The wicks tell us everything, guys. And the body can be red or green, but mostly we want to see red bodies if we're getting into sells, guys, because that's selling pressure. And where we're looking to identify these guys, we don't want to find these candles in an area of consolidation. So if price action is trading sideways, you know how Dave and I, we box that in. We don't give a shit about those candles. We're not trading them. We let the price consolidate. We allow it to do what it's got to do. And what we're looking for is the breakdowns out of that box. And we're looking to identify for these candles. But if we get a bearish downtrend on a higher time frame, and then these always we get these pullbacks, we can scalp these green candles come back up, but most of the time is they're coming back up and then they're creating a lower high. And then what we're looking for is the continued selling opportunity. Okay. So this candle could be a pullback, these three green ones coming up. And remember, this was a green candle too, coming all the way up here, but now we're reaching this resistance level. This could be a higher time frame resistance, like an hourly, 4-hour, or daily. And now our 5-minute candles are starting to get rejected. So we gotta look, we're seeing this upper rejection wick coming down, closing as a shooting star. So when you guys get more technical and you guys understand how scalping works, you guys can start taking trades up here, sells up here. This is when you become like sniping entries. But it takes time, guys, to learn that. So but if you don't feel comfortable taking sells up there, then look for a confirmation candle, your next one. So what we're looking for is our next candle to continue to the downside. As soon as we break this support, we could get into a sell here, place stop loss above this wick and that resistance. That's a safe place to place it. And we continue to ride these red candles down. As they go down 10, 20, 30 pips, we look to secure some profits, maybe 75, 80% of our trade. We'll leave a break-even runner to catch more if it continues to break down. But if we catch a trend reversal and it's when we're scalping 10, 20, 30 pips, guys, we tell you all the time, cash out a little bit, take some pips, take some profits, because we'll always look for reversal trades. We'll get more. But if this thing continues to break down daily, for hourly supports, this is going to drop, guys. So if you guys have been trading with Dave and I, like on New York sessions, you see where these things break out for more than 100 pips. I did London session last night. We grabbed about 200 pips last night. So it was pretty good, guys. Just identify and learn these candles, guys. Believe me, I wouldn't be wasting your time if these candles weren't worth it. But this is where you guys make money, guys. So just takes time, guys, to learn this stuff and put it in practice. Okay, so let me just show you this example right here. This is what we're looking for, ABCD pattern right here. So this is the shooting star candlestick pattern. See this downtrend? We got a red candle, red candle, red candle. So if you were already in this existing trade, yeah, you profited, but we're looking now for like a pullback off of this. It's always going to reach a level of support. We got a rejection wick down here. This is like a spin top candlestick and indecision, but now buyers come in here at support and they take it up. It's a nice bullish candle, and next candle continued up here too. But now what I would have is my resistance would be placed above here, and what I'm looking for now is continuing this downtrend, so to make lower highs and continue going down. So as soon as I draw my resistance right here and I start to see this wick forming, it's giving me a clue that the selling pressure is increasing up here. So if you don't feel comfortable getting up here like a sniper entry, taking that wick, it's when you start to learn how really price action works that you can get into trades like this. But if you don't feel comfortable, what I always tell you guys, wait for confirmation. Watch how this candle closes. It's only 5 minutes, guys. So if you're scalping a session, 90 minutes, 2 hours, 1 hour, you're going to find multiple entries, guys. So just be patient and wait for this candle to close. It comes all the way down, rejected. The wick is about 2 to 3 times the size of the body. And look at where it closes. It closes below this red line. So we close below support. All we need now is this is the retest candle. See this one, how it opens up and the wick comes up right to this red line. That's where we take our sell entry. That's the retest candle. Hit the sell button, place stop loss above there, and we ride this momentum down. As long as these red candles are continuing to make lower lows and lower highs, and this one where it closes below the support level, then we start to see it go down and we're profiting pips on the way down. Okay, so this whole started this pullback with this shooting star candlestick. That's why it's your second most important bearish candle on the spectrum. Okay, let me know, guys, if you got any questions. So this is how it happens here. Okay, so you see this downtrend coming down, bullish candle. This one went up green and now it starts to get rejected down, shooting star. Next candle we're looking for right here. It open a retest right here at the resistance, and we're looking for it to continue go down. That's where we take a sell entry, stop loss placed up there, and we take our pips and we profit. Okay. There it goes. And slowly we'll start breaking down. So now when this candle body closes, we record where's the support line, because we're looking for our next candle to break and also break this support down here. And that's where we could get the continued this. Drop all the way down, guys. Okay. So that's shooting star. And now we're just going to move on to next candle, bearish candle. Okay, so those are two of the most important candles, guys. Okay, for bearish family, it's the bearish engulfing and the shooting star. Now we're going to go into more like neutral candles, clue candles. So we're going to go into this one, bearish harami. Okay, we did last week the bullish harami in the family. A bearish harami. Okay, these are clue candles. Okay, what they are is they open and they close inside a green bullish candle. Okay, and they're giving us a clue that market makers could be reversing a trend. Okay, there's a reason why they're gapping it up and closing it inside. Okay, because it's giving us a clue that it could be reversing to the downside. So when you see these candles forming, we don't take entries on them. We wait for our next candle for confirmation. But you see here, the E right here, the bearish open inside the preceding bullish candle. So it opens inside here. And then look at where they close it. They close it inside the bullish candle. So it's giving us a clue that it could be going down to the downside. All we need is this bearish candle to break this support and we're going lower. This is a resistance level, but now it's acting as a support. And as our candles continue to break down here, it broke down, closed below. Look at this retest. This wick comes right back up to this red line, guys. Like I'm not making this up. This is an actual chart that we traded, and you could have another sell entry in here and take it down. And look at here, breaks below a critical support line. Body is closed below the green line. Here's another one. They gap it down, they retest the green line, and they push it down further, guys. That's why retest confirmation candles are so important, okay? That's why you don't have to take every single impulse candle there is on a chart. Just relax, guys. Let the trades come to you. Don't force your trades, okay? One tip I can give you guys is don't force trades. Let the trade come to you, okay? The Forex market moves up and down all day, 24 hours. Look for the best trades possible, guys. So this is what the bearish harami is, okay? So we have the bullish candle, and then now we open right here, okay? We open, and it's inside. See how they gap it down? Remember the green candle closed up here? We should expect a red candle to open up here. What market makers are doing and banks are doing is they're trying to artificially push the price action down. That's why they gap it down. This could be like a 1 or 2 pip drop right off the hop, okay? Because they're trying to manipulate the markets and push this candle down. They want to reverse the trend. So this is a clue candle that's telling us, okay, they gapped it down inside the body of the buyers. Now what they're trying to do is scare the retailers. Why did they gap it down? You know, when this is a bullish candle, it should open up here and continue to go up. These guys are trying to reverse the market. And then it comes down and it closes inside the belly of the green candle, okay? So the word harami comes from the Japanese. The Japanese invented these candlesticks. Harami means pregnant, okay, in Japanese. So this is, think of it as like a mother, and this is the belly. The baby is inside the mother's stomach right here. That's what the Japanese call this, okay? That's what it's called. Harami means pregnant. So think about it. This red candle is inside the body of this red candle. And if it's bearish, then we could be looking for price action to go to the downside, but we need more confirmation, guys, okay? So we're always looking for these as reversal candlesticks. Remember, bearish harami is a reversal pattern, technical chart pattern, trend reversal, harami meaning pregnant. It's a signal candlestick and it's a 2-candle pattern, okay? Because we need addition from our next candle to engulf the rest of this green candle. So this could be like a pullback coming up, higher time frame resistance. Market makers gap it down and they close it inside the belly of this green candle. It's giving us a clue that the reversal could be beginning. Next candle is red. As soon as we break below this, these 2 candles have engulfed these buyers, and now we could get into a sell entry, stop loss up here, and ride this momentum to the downside, okay? And it's all identified by identifying this Harami candle that opens and closes inside a bullish candle. Okay, that's why when we're trading live, guys, I zoom into the candles to show you how market makers manipulate the market. I gotta limit as much as I say live, because I don't want to expose too many brokers and market makers and shit like that. But when we get into sessions like with you guys, I can really educate you guys on what happens in the markets. Okay, we've been trading the markets for 20 years. We know all the dirty little tricks that they play. It's just you guys learning and not falling for the head fakes, guys. So this is how this happened. Okay, so we got a bullish pattern. Okay, moving up, higher low, higher high actually, and then it comes back, reaches support, more buying liquidity, they push it up. So we're in a nice bullish uptrend. Okay, but we know that eventually it's going to reverse. Okay, so we're looking for our candlesticks. Okay, so we have now up here resistance. We get up here a long rejection. So this was forming like a shooting star candle, but look at where it opened. Okay, they gapped it down and they opened it right here. It came up bullish. We have a big rejection, lots of selling pressure. They push it down and they close it inside. That's clue number one. Now what we're looking for is continuation. This candle, as soon as we start to engulf this green candle, we can go into a sell, stop loss up here, and we ride the momentum down. As soon as we start breaking critical support levels, remember this was a resistance level, so now it should act as support. As soon as we break it down with that candle, look at this. Buyers come in and try and push it up, but sellers hold here. We make a lower high and continue to drop this all the way down. And it was identified by learning what this bearish harami is. Watch how they push it down and they close it inside the candle, okay? Because this should have continued right off of the green candle, but it didn't, okay? And we spot these all day in the markets, guys, okay? All day. Especially when we're scalping 5-minute candles. You get to see this shit live. Okay, so that's the bearish harami candle. And it's not as important as your bearish engulfing and your shooting star, but identify these because it could be giving you guys a clue that the trend is starting to change, okay? And anytime we get clues from the markets, guys, this is where we could be making money, okay? Okay, so next one I'm going to show you guys now, that was bearish harami. We're going to move into pin bars, okay? So the bearish pin bar, okay? This is the bearish pin bar. We have a downtrend. This is the pullback. And then now we're looking to short the market again to continue a lower high, like continue trade with the trend, okay? Because if this is just a pullback, we could be cooling off the RSI. We could trap these buyers and selling momentum will come in and start pushing it down. That's why if we look on like hourly candles and we start to see higher time frame bearish, that's what makes scalping easy on the 5 minutes because we're trading with the higher time frame. So, but we need to identify if it's a pullback. And we can see that this was a bullish candle. It came all the way up here, reached this level of resistance, and now we start to see it get rejected. It's coming all the way down where it's got a wick on the bottom, but the body is, remember, it's below 50% of the candle. So that's what makes this a bearish pin bar. So we're close, and look at where the body closes. This is important, guys. Remember the red line right here was resistance support level. Look at where they pushed it down and they closed it below there. So what we're looking for now is just continuation. This candle continued all the way down, but we had buyers. So this is kind of like a retest candle and then one more. So this is, you needed an extra candle. But if you get in a sell here and you place your stop loss above the wick of your candle, you're still safe in this trade. You just got to allow it to do its thing, okay? Because there's always going to be movement, price action, okay? It might go down and come back up, but the overall trend, if we start to get the selling pressure, see now where it gets engulfing, we take out this body and half of that one. All we need now is continuation right off this candle. Look at this one actually opened and came again, retested this for resistance, and sellers came in and pushed it down further. Then we started to go engulfing. We took out all of these green candles. They're out. This one is out. This one's out. This one's out. Nothing but downside to go from here. So we continue and look at continue lower high and push down further. So you can leave partial runner, but on a play like this where you can grab 10, 20 pips right off the hop, take your profits, guys, a little bit, scale out 50, 60, 70, 80%, take pocket, put those, that's like me right now. If I give you guys like $100 bill, you know what I mean? And I say there could be more where that's coming from. But I say take 80 now and leave 20 bucks running because there might be more coming. do that all day in the Forex market. Instead of taking your entire $100, what if this thing, because all the time, I guarantee you guys are trading and then you say, oh shit, I cashed out and then it dropped another additional 20, 30, 40, 50 pips. And we always say, oh man, if I continued to hold that, I would have made more money. But this is a good way, good strategy to get you some nice profits and then leave a little bit of a runner just in case it continues to break down. Because when these things break down, oh man, they can really drop. And then you want to collect those additional pips, okay? So let me just show you the video of this one real quick. And guys, if you have any questions, guys, remember, it's interactive. You guys are welcome to ask any questions. It doesn't always have to be about these candlesticks. If you guys got anything that you guys want to talk about, right after I'm done this, then we'll have an open chat. So this is the bearish pin bar, okay? It looks similar to like that spin top candle that I'm going to show you next. But the only thing take from this, guys, is here's the open. It went up here. It went bullish. Buyers pushed it up here. Sellers brought it down here. And then it closed right here. But here's 50% of this candle and we're closing below it. So you got a probability is that we have a more bearish pressure to the downside. Okay. That's the only difference with this and a spin top. Okay. The spin top is completely neutral, right in the middle. So that's an indecision. Nobody won that time frame. Buyers pushed it up, sellers pushed it down. It's like if we're playing basketball. I score on you and you score on me. I score on you, you score on me. No one's winning. The game is tied. Okay. Think of it, but then this one has a little bit more selling pressure. So the sellers are winning in this time frame. Okay. That's the only difference. BB King happened to me today on a NAS sell, stop, close too early. Yeah, no worries, bro. It happens to all of us, but just learn from it, and so that you don't make that mistake again. But that's all you got to do is when you get into those nice profits, scale out a little bit, leave a partial runner with a break-even stop loss. And then when that partial runner starts going down an additional 10, 20, 30 pips, then what you do is you can either close that entire trade or take that stop loss from break-even, put it 10, 15 pips in profit, and just you're secured those, no worries. That money is secured. And if this thing continues to drop, you just move your trailing stop loss down with the price action. And then if that thing really dumps, you can secure a good amount of money on the downside. Okay. And guys, we don't take entries. We don't take trades off of these. These candles are just clues. Okay. Remember, we want to take trades off of a bearish engulfing, a shooting star, those candlesticks. But these are giving us a clue that the trend could be changing. Okay. So this is how it looks. We got a bullish candle come up, continuation bullish all the way up here. We reach a higher level of resistance, and then our 5-minute candle starts getting rejected. It comes all the way down here, closes. Okay, but you see, it only closed right here. We still have all these buyers still left in the frame. So what we need now is this is our confirmation continuation candle. It continues here, small wick to the upside. Now when it starts coming down, we could take a sell entry, place our stop loss above this resistance, the wick of this bearish pin bar, so we're protected. Okay, because remember, these were selling pressure. So if I get in this trade, I feel confident putting my stop loss above here. If it reverses and taps us out, okay guys, that's the truth of trading. It happens, but you gotta understand your risk to reward. If we're willing to risk 10 pips to make 10 or 20 or 30 or 40 or 50, you're getting, number one, a good 1-to-1 on your money. That's minimum. If you're not getting 1-to-1 on your money, I don't even enter the trade. It's not worth it. Okay, because remember, you have a spread involved with your broker and you also have commission fee. So on a 1-to-1 trade, the broker is making money, not you. Okay, so we got to understand, is this thing breaking down on a higher time frame? If it is, then this is a safe trade. I'm willing to risk 10 pips to possibly make 20 or 30 and look for maybe 2 to 3 on my money. Okay, so if you're like, think about it, guys, like on the streets, if you're getting 1 to 3, 1 to 5 on your money, if you're willing to risk $100 to make 300 and 500 on a quick flip, that's where you want to be. That's where you want your money, guys. Okay. On a 1-to-1, it's a safe trade, but we're looking for more. Okay. So if we want to get in we're looking for higher time frame breakdown. Okay, so that's why we're looking. If this was an existing downtrend on a higher time frame and this was a small pullback, oh man, my eyes are like open for this. I love these trades because this is where we get a lower high. Let's say RSI is coming back up to 50 and gets rejected, then we'll get selling pressure, push it all the way back down. Okay, so that's what I'm identifying on these candles. Okay, so this is what it looks like on a chart. Okay, so remember, higher time frame downtrend. Okay, so this is nice coming down. We could have a trend line also from here placed on that wick coming down. So then we see that it's creating a lower high. This is the pullback. Bullish candle comes up here, but gets rejected up here. We have a lot of selling pressure coming from hourly for our daily, possibly this trend on what is traded here. It's GBP USD. Probably the British pound was weak and the US dollar was strong. But when it comes up to here, look at it, psychological number 136 all day. Okay, so we got to expect something to happen here. Buyers pushed it up, but now we get this long rejection wick. Bearish pin bar candle, close below support. If you don't enter on this candle, you could wait for this candle. Take a sell, stop loss up there, ride this momentum down, and then just bring your stop loss to break even and secure pips on the way down, guys. That's all it is, guys. It's not like rocket science, okay? So it's just, you got to feel the markets, okay? And also what session you're trading. You got to know which ones are volatile to have these big moves. New York all day, the one that Dave is trading this week. I did London last night. Man, it was nice volatile, but good action. And Tokyo we'll see tonight. Tokyo is kind of consolidation, but guys, we catch big pips on Tokyo too. So we can make pips all day, guys, okay? So that's, I don't want to spend too much time on these candles because they're not as important as the other ones. So the spin top candle, it's similar to this one. The only difference is, guys, the spin top is neutral. 100% it's 50-50 candle. I'll show you the bearish one right here, okay? Oh, that was a pin bar, sorry guys. Let's see, where's our bearish spin bar? Okay, yeah, so spin top is just the same thing, okay? All it is, I don't need to go over this. It's the same as that bearish pin bar. The only thing is the volume is right in the middle. It's 50-50, it's neutral. So we're not taking trades off of this. All it's telling us is it's giving us a clue that the trend may continue to the downside, but we need more momentum, more sellers, or it could start to be reversing, okay? That's the only importance of a spin top, okay? It's an indecision. I want to get more onto TradingView and show you guys live candlesticks. So I'll right here, this one is important too, the hanging man, okay? So the hanging man candle, this is like our least bearish, but it is still got a red body of volume, okay? So again, we wait for like a pullback coming up to here. Now we got a level of resistance. Here's a spin top candle, exactly right here, coming up, down, and closing right in the middle, indecision. So it's giving us a clue that the market could be changing direction, and we get it here. With this candle, we opened red. It came all the way down. Look at the wick, okay? This was a really big bearish candle. I guarantee a lot of sellers took this, but you got to see what's going on. So when it came down, you could take that as an impulse trade and cash out, or if you continue to hold this, you got to watch what the volume is doing. So it came down to this level and it picked up buyers. Buyers pushed it right back up here, but it closed right here, okay? So that's what makes it a hanging man candle, because you still have red volume. It's still at the top, but we got to respect that buyers came in at the bottom here. So we need a continuation candle. We need this candle and to fill this wick. Once it fills this wick, then we're going to get continuation to the downside. So off of a hanging man candle, what you're looking for is, you could take a sell entry here, place your stop loss up here, but what you're looking for is the body of this candle to completely come down and take out this wick. When that happens, we've taken out that candle. Look at the next candle, made a lower low. Look at the wick, lower low, closed right here. Now we're getting continuation, bearish engulfing candlesticks. Look at where it closes, right below that green support line. Look at the body. If you look closely, it closes below there. So that we had some sellers close below support. So we could get additional next candle, sellers coming in. So this candle opened below. We do have a pullback, like it went bullish. It came up to here, but identify the wick, 136.20 right here. It made it's a lower high from here, lower high, connect these candles together. Now you're in a nice bearish downtrend. They're making lower lows and lower highs, and look at it drop down further, okay? So you can have a sell entry right here and look at your profiting. Look at these four beautiful bearish candles. And then once it starts breaking down here, don't get too greedy. If you go up 10, 20, 30 pips, scale out 75%, leave a small runner with a break-even stop loss or even with a trailing stop. And guys, you make pips all day. Guys, the Forex market is an ATM machine. It just prints out money, guys, okay? And especially when we're trading US 30, NAS 100, and gold, oh man, Bitcoin gets insane. Look at my Blair, he made 120K in 1 month, and he only got paid out $25,000 from fucking funding talent. So that's why now, guys, we're keeping it small. If you guys with that funding talent, they're paying out 5, 10K a month with no problems. But when we're breaking them, they're not paying out. So but just to show you the power of scalping, guys, for real, you guys can make some good coin. Okay, so that's the hanging man candle. I'll go real quick into this video, guys, because it's 10 to 8. I want to get to your questions, guys. But this is the hanging man candle. Okay, so it opens up here, comes all the way down here and makes a low. Now it's got rejection, long rejection wick where we got buyers pushing it up, and it closes right here. It kind of looks like a hammer candle, but it's called a hanging man candle when it's bearish. Okay, so now what we need is, we're not taking trades off of this. We need to wait for our next candle to come down and fill this wick. Then we could get pressure to the downside. Okay. So we're looking for something like this, a pull back reaching higher level resistance. We got our hanging man candle formed. It opened, came down. We got still some buying pressure, close right here. And then we're looking for this candle. This candle right here is our confirmation. We get into a sell, stop loss up here. It takes away this entire wick. We've taken all of that volume out of that candle. And now we're just looking for a continuing downside. So a hanging man signals bearish reversal. Okay, it's giving us a clue. It's a technical chart pattern. It's a reversal pattern. We're looking for the wick to be 2 to 3x the size of the body, and it's commonly found in an uptrend or a pullback, and it can be red or green, but obviously if it's red, there's selling volume in there. Okay, that's selling pressure. Okay, and this is how it would look on a chart. Okay, you get that, I just showed you it, and break down, there it goes, it engulfs that wick and then continue to the downside. Okay, so these are good candles to identify. They're easy to spot on charts, guys. And then, guys, just to wrap it up right here on the bearish family, the least important candlesticks, guys, are dojis, and they're pure indecision, guys. We don't trade them. A doji candle looks like a cross or a plus sign. It's of no significance. It's just giving you it's a very small range candle, no volume. Don't even look at those candles. Okay, they could be giving you a clue that markets are changing, timeframes are changing, but never ever take buys or sells off of them. And when you start to see them forming with like indecision candles, that's where we trap those candles. We don't take trades, we box them in. I'll show you guys live right now. So I just want to make sure that we went over all the important candlesticks for the bearish family. Yeah, guys, so that wrapped up now. So you're gonna have 3 webinars recorded and uploaded. Introduction to candlestick wicks. If you guys missed that, it'll be uploaded. Characteristics. Then we did the bullish family last week. We just did the bearish family. Now, guys, we're gonna get into the important stuff. Okay, so either tomorrow or Wednesday, I'm gonna run another webinar. We're gonna get into this stuff, guys, and if you can make it for these ones, this is the important stuff. So a lot of guys are asking questions about what are pips, lots, leverage, spread, what are different order types. So we got buy limits, buy stops, sell limits, sell stops. I'm going to go over that and how to place proper stop loss, guys. So this is going to be a good webinar for you guys. I highly suggest you guys get in on this one, and then you guys can ask me a lot of questions on these ones. Okay, so that's good for the bearish family right now. See here, this is our trading view chart, guys. So this is where you see all of these candles of different shapes, sizes. So this is where we're looking for those candles, those bearish engulfing, those shooting stars. Okay, so if you start to see like here, if you put from up here to here, you start to draw your trend line. Okay, you start to see that it's moving down, descending. It's coming down in a descending triangle. Here we have a support level. Here's like another support level right here. But now when candles start breaking down, okay, I start to see this choppy, shitty action. See this choppy action where the candle's coming down, back up, down. I don't trade this. Guys, this is what you do, okay? You want to make some good money? Understand how to do this. Box these in, okay? We call this the sniper trapping gap strategy, okay? We just know how price action moves. And guys, price action is going to move in three directions. It's either going to move sideways in this box, and what that is, what's going on in there is accumulation and distribution. This is banks and market makers just accumulating for the next move. Okay, you got to understand, but you got to be patient and wait for the move. So now when we're starting to connect the dots, we have a bearish downtrend. Okay, every time this bullish pullback came up here, look at what we got. What candle is this, guys? Who can answer this candle right here? Okay, what did we just go over? Tell me what this candle is right here. Okay, so look at this. This was live trading today, guys. Okay, right there. What candle is that? Who's got it? Let me see. My man Victor, hanging man. There you go. See, that's why we take these candles. Like, you got to understand what's going on. So this was the pullback that came up here right to our trend line, and then we had selling pressure come in and push it down the wick, but it wasn't enough to take this is a big bullish candle. So buyers continue to push it up, but it closed as a hanging man. So remember, now what we're looking for is like a wick fill. So we have follow through, a big bearish candle, take that out and start to engulf this. But price action continues to just come in this consolidation area. See how we don't really take a nice big dump down here? Because I'm looking for a sell entry down here. I'm waiting down here patiently, but this is starting to give me clues now. We got a hanging man pattern formed followed by a bearish engulfing. But see how now buyers prop it right back up? So that's why you got to know the context where you're looking for these candles. I'm looking for them to break at critical support levels down here. So now you see price squeezing to the apex of the triangle. See how it's coming down? And this is a flat support level. So as soon as we get over here, guys, this is right now. Okay, see this candle? We have our first bearish candle break and close below here. Okay, so this is the impulse candle. A lot of guys love to trade the impulse candles. You're more than welcome to trade them, but you got to understand that they could just pull right back up and then they're going to come up. If you're patient, okay, if you don't feel comfortable trading impulse, wait now. Next candle, what is it doing? Okay, so we got a little pause candle. Then this green candle comes up for the retest. See how it comes up? It tests this zone. Now, this is where you get into a sell entry. Place your stop loss above there. Look at this. Look at the risk to reward ratio right there. 1 to 2.82 on our money, 1 to 3. So this trade, we're risking 10 pips to make almost 30 pips. Okay, and it's beautiful. Look at it just continue to break down. Lower lows, lower highs. We could run this. We could run it all the way down. When it starts to get down here and we start to see rejections down here at a level of support, this is where you're scaling out, guys. Don't get greedy. Take 75, 80% off the table. Leave a small runner because this could pull back and continue to go down, okay? And this is live. Like, this is live trading. This was, what are we on? US 30 on the 5 minutes. So it came up here and it pulled all the way back up here, created this lower high, and now it's consolidating in here. So this is what we're going to be trading in another hour when we go live on the Tokyo session. But right now, that's all we're looking for. Like, do you guys understand? Do you guys got any questions on that? Like, see how we got a descending triangle. Overall time frame is bearish. Look at 5 minutes, hourly. We're dropping on US 30 today. So you want to trade with the trend, guys. If you don't feel comfortable counter trading, don't counter trade, guys. Trade with the trend. Here's another one. Look at all these pips, guys. This is a head and shoulder formation. Here's your left shoulder. Here's your head, right shoulder. As soon as it starts breaking down, guys, you lose all these like support levels. Right there's one. Here's your other one. There it goes. It's got right here. See this? This was the last drop. See this wick right here? That's it. It's going free fall from here. See where it comes down? I got nothing. Look at how black this chart is. There's fuck all here. Okay. That's where price action is going to drop. Okay. I got to go all the way back. Look at this. See, this is where they gap it up. This was Sunday night, guys. See what the market did? The market makers. Okay. Look at how they gapped this up. Look at these. Here was the close of this like candle. Look at where they propped it up. They propped it up because they wanted to push it up. Okay. But now look, when we filled the gap, this is called a gap fill. Okay. So we filled that gap right here. See right here where that right there, if I connect it, that's where we got that big drop. Look at that, guys. That's a sell entry all day, guys. Okay. So we have it coming down, breaking this level of support. You guys get your tool and you guys get into trades right here. Okay. This is what we identify. This is where the money is, guys, okay, on trades like this. Have your stop loss placed maybe up there at the lower low where you want it, right there, above that big bearish candle for protection, and you ride this down, okay? And look at all those pips that can be made. That's a nice action. And scale out of that and continue to trade with the trend. Why do you think I'm in all of these sell orders, okay? Continuing to break. Here was my last level of support on that same play, right there, you see? Connect the dots, guys. Look at that. As soon as we lost this support, boom, here was the next sell entry. Drop, okay? Tonight, later on, NASDAQ, okay? We'll have this area identified. If NASDAQ breaks this low, look at where we're going to drop, guys. Look at right here. Look at this wick. Look at that drop. This is a free fall, guys. If NASDAQ, remember I told you guys, August is a new monthly candle. August is notorious for sell-offs in US 30 NASDAQ. Guys, we could be just positioning ourselves for shorting the market right here. Look at here. When we lose this support, this thing is going to drop down to here. And look at the date on this, July 26th at 2 p.m. Do you guys remember when we got down here? This was FOMC, when Dave traded it live, that red folder at 2 p.m. When the market dropped and recovered, we could be coming back to retest this area, guys, okay? Amaya let me know if I'm pronouncing that right. Mayu, Dirty 30 threw me around today. Yeah, it's you want to trade with the trend, bro. Like honestly, you got to know how it's moving and just trade with it. If you don't feel comfortable counter trading it, then don't counter trade it. Just trade with the trend. But you just got to be patient. Like look how the chart is set up. Every pullback, I'm looking for sells once they break levels of support. That's where you can get in real quick, grab your pips. Like look at the drop from here to there. If I grab the ruler, guys, and this is easy trading right here, there to there, 84 pips, okay, guys? 84 pips is some serious money, okay? And that's in 2 5-minute candles, 10 minutes, 84 pips. Take your profits, scale out, leave a runner if you want, okay? But that's all up to you. Then again, when we retest this level again, look for the sell entry breakdown again. How many pips is this drop right here? Right there. There's another 106 pips, guys. For real. I'm not making this shit up. And we can catch these pullbacks if you want. Like Dave and I can scalp every single candlestick. But what you want to do is you want to identify this consolidation. You want to identify like that hanging man candle, bearish engulfing, downtrend. So everything is leading to get us into a sell. All we need is this confirmation, this candle to break that support. And right here, guys, again, get into a sell right there, stop loss placed above there, safe stop loss, and ride the pips down. Here's another trade right down there to there, another 100 pips, guys, okay? US 30 and NASDAQ, they move, guys, okay? Gold is volatile, but US 30, and once it moves in a direction, it's good. Armani, bro, wait till you see the 1-minute scalping that we're going to do. There's going to be fireworks, okay? Because I'm more of a 1-minute scalper. I've been doing it all my life, but I like to do 5 minutes because it's not as volatile, but there's not a lot of live traders that will scalp 5-minute candlesticks because they go up, they go down. It's difficult to trade them. It's not easy, but once you learn how to trade them, then they become easy. But 1-minute candles, oh my God. Like, look at these like right here. This trade right now, guys, this is live. Look at this, okay? See how it's breaking out? This would be my resistance right there. Look at this, consolidation on the 1 minutes. Look at this, guys, okay? Shit, could have got in this trade right now. Consolidation, head and shoulder pattern inverse. Here's your left shoulder, here's your head, here's your right shoulder, bullish right there. There's your initial breakout. If you guys don't catch the breakout candle, here's your retest candle. Look at it go, okay? Retest candle, there's your buy entry. Buy entry right there, ride it up to there, possibly. And remember, what are these red lines? These are my 5-minute resistance support lines. That's where the 1-minute candlesticks want to go, just like how we do a higher time frame. 5 minutes are the higher time frame. Look at that pips already, guys, okay? From the buy to right there, guys, I can't even say, what is that, 30 pips, guys, 30 pips right there in 3 minutes. Okay, wait till we start doing the 1-minute candlesticks, guys. And you see here what happened. We had a nice big bullish candle. Here's your pause candle, indecision, a doji candle, spin top. And then now you get a continuation back up here. You got new resistance. It came up to here. Selling pressure pushing it down. Again, you have another pause candle. I would also add RSI on my chart here to see where that strength is at, if this can continue to get pushed. But in 3 minutes, guys, if I'm at 30 pips, I'm going to scale out for sure 100%, 80% of it, and I'll leave a small runner. Guys, 3 minutes, 30 pips. Fuck that. Like, think about it. If we're doing like standard lots, we're making $300 US in 3 minutes, guys. You look for a few of these trades a day, you're at $1,000, $2,000 daily. Okay. Believe me, we do it. I've seen it on YouTube, but to see it live will be a pleasure. It's coming, bro. All we want to do is we want to hype up the YouTube channel. We want to try and get to 1,000 subscribers. We're almost there. We're at, I think, 650 now. So maybe the month of August, we can get the 1K subscribers, because then we want to get into that YouTube algorithm where they'll start recommending our videos, and we can get into then really scalping the 1 minutes and show people how we trade. And but you got to understand that they're erratic, they're volatile. That's why you're going to hear me on every single call. When we go up 10, 20, 30 pips, I'm going to be telling you guys to take profits. Okay. Believe me, I'm going to be like, you guys better be banking, because I'm banking. I'll show you guys my MT4s. That's why we put the trades in that free Telegram FX group, to show people that we're not just talking, we're actually taking trades. And if I'm getting in a trade on 3 minutes, making 30 pips on standard lots, that's 300 US in 3 minutes. Fuck, I'm out. Like, what else do you want? Some people got to work an entire day to make that money. But that's why I leave a runner. Look at this thing continuing to break. Okay. And then here's my 5 minute resistance. And this thing now, look, it had the impulse break. Now we just need 1 minute support here to hold, and this shit's going to go up further. But now here's your pullback coming down. So we just follow the 1 minute candles, how we do 5 minutes. Identify where your support is and just continue with these. We can also do the 3 minute candles. 3 minute candles got a nice flavor too, because it's in between the 5 and the 1. 3 minute candles, I love scalping 3 minutes as well, guys. So we'll introduce you guys some awesome strategies, guys. We're scalpers, raw scalpers. Dave trades like with a naked chart. I use RSI mainly for looking for divergence and strength, okay? But I've always been trading just raw candlesticks. But I add RSI just to help educate guys, and so that they can start trading with it. But like, if I'm trading alone, I smoke a blunt and it's just me and just candlesticks. And guys, we're going to do live sessions with you guys on Zoom. Okay. So our whole goal is to grow YouTube to where we can get enough members in here. We're going to start to limit our live trading on YouTube, and we're going to be doing more live trading private with you guys. Okay. Because we want to give back to you guys. You guys are our sniper team, guys. But the reason why we're just doing 2 live sessions right now, 3 live sessions a day, is just to try and grow that YouTube channel. That's basically it. We just want to get in that algorithm where, because we see what's out there. There's a lot of guys that sign up and say that they've been scammed by a lot of signal groups, and you're not seeing, like, I'd love to see a real trader face to face trade, take a trade, show live how you trade. I got more respect for that, you know, than guys that just hand out signals, and you never know who they are, what they're trading. You can't talk to them, you can't ask questions. So with Dave and me, it's full transparency, guys. You guys are like a family to us. You guys are like a brothers. You know what I mean? It's more than just like trading. Okay. You guys, we're going to do this the rest of our lives. We want you guys to be successful. We want to change people's lives, and we're doing it day by day. Like, you got to see the stories we're hearing from people around the world, what they're telling us, like how much $50 US means to them. Like, we live in North America, $50, you know, it's good money, but not really to someone who's living in like Africa or India or something like that. $50 goes a long way. They were telling me their monthly wage is like $50 US. And on one trade live they took with us, they were making that, and they're going nuts. So that's why we do this. We just want to help the world, change the world, bro. We're not greedy. We just want to help everybody. Armani, thank you, bro. Let me just read the chat here, guys. Okay, guys, now it's open floor. Open floor. You guys can unmute your mics, guys. Ask questions, okay? Because we'll go for another like 20 minutes, 25 minutes. Guys, if you guys got questions, this is the time, for real. It doesn't have to be about bearish candles, about anything. Trades you took today. If you guys got questions about brokers, spreads, this, that, whatever it is, I know you guys got questions, okay? You guys
Ronnie,
are trading. Yeah, go ahead, bro.
how's you going, dude?
Good, Doug. What's up, my man?
Nice. Hey, just refresh my memory. It's Fusion Brokers is who you use. Is that right?
We use Fusion Markets FX out of Australia. I believe they're in Sydney. Okay, they're an Australian broker. In Canada, they used to have all of Canada allowed to go with them, but something happened with Ontario with legislation and regulation where they don't. Me and Dave got in early. We were in with them and Blair. We got in like 2 years ago with them, so we kind of got grandfathered in with them. That's why I'm not leaving Fusion, because their spreads are amazing, their commissions are amazing. But for new, because we got new guys, we're from like close to Toronto, Ontario. We're London, Ontario. We got guys all over Ontario coming in with us, but they can't get in now because there's legislation. But only Ontario and Canada. Every other province is good. So you're in Alberta, right?
Yeah, you betcha.
Yeah, so you're okay. It's just for Ontario residents. They no longer accept Ontario residents, but they have another one I found in Australia. It's called Pro Markets. I believe that they accept Ontario residents for guys that are on the call from Ontario. They're another one with Australia has really good brokers, guys, for real. I love them. Like I can't speak highly. Like I'm telling you guys, my pip spreads on gold is 8, which is 0.8, not even 1 pip. That's why I love scalping gold, guys. Bitcoin is 2 pip spread. I'm hearing guys have 7 to 10 pip spread. You can't make money scalping like that. The only people that are going to make money are the brokers. They're going to take your commission and your spreads. You're going to be so far behind in the trade that you can't even scalp. You got to find, guys, spreads are huge. I'm going to go over that on our next webinar. I'm going to break down spreads so you guys understand it, but you got to understand what your broker is providing. Like if I look right now, like I love trading currency, like GBP USD, Euro USD. I love those. Guys, I can get in Euro USD right now. The spread is 0. There's not even a spread on Euro USD. It's just I pay my commission and I get in. I could be blue right away. You know what I mean? Just execute a proper entry and you're in profits right away. Like I'm looking at my screen right now. Euro USD is 2. GBP USD is not even 1 pip. They're basically free spreads. Bitcoin is 2.2. Gold is 8 right now, so less than a pip. So guys, and I don't know if Fusion for the US guys, I know you guys in the US, you guys have been asking us. I don't know if they have US yet. US has big regulations. You guys are tough, man. I don't know what Biden and Donald Trump are doing, but they don't allow US residents to get into a lot of Forex brokers. And then you guys got to use those B brokers like Hugo's Way, those other ones. And then that's where they got, they don't have as much liquidity as an A broker. Fusion is an A broker. So they have a lot of volume. Like you got to understand, they get a lot of liquidity, they supply the world. So that's why they can offer such good spreads. When you get into a B or C broker, they don't have as much liquidity. So they have to offer higher spread for them to make some money. Okay. So that's how, good question. But yeah, we use Fusion Markets.
And then you use Saxco for the feeds. Is that right?
For gold, I use Saxo for my gold charts because there is other ones, but I don't like the wicks on the other ones. Okay, so let me just show you right here.
The only reason I'm asking, I just want to get set up so I'm trading the same as you guys.
Yeah, so like my gold, let me just get rid of this, guys. So the gold chart, guys, there's different ones you can use. Here's Saxo, okay? I love Saxo. Look at these 1 minute candles on gold, guys. We could have made a shit ton of money right now live. But look at these. Like I like nice full body candles, okay? There's other ones like Oanda that have gold, and they got real choppy candles. Like this one is Oanda. Sometimes they get real choppy and the wicks are crazy. But I just, me personal preference, I've charted a lot, I've traded a lot of charts, and I just feel more comfortable with when I'm on gold with Saxo. That's just me personal preference. But yeah, good question. So and then also on US 30, I use this one. So just so you guys are familiar when I'm trading, the US 30 I use is currency.com. Okay.
I can't find that, Ron.
No,
I can't find it in TradingView.
Really? So if we go in here, US 30.
What?
Right here, US 30 currency.com. It's the US one, the first one. Index CFD. So put in US 30 in the under all. Make sure you're under all.
Yep.
Okay. And then you see the first one, US 30 currency.com with the American flag.
Oh yeah. Oh, there it is.
There it is. Yep. Yep. So that's the one I use for US 30. NAS 100, guys, I use Global Prime. That's my NAS 100 is Global Prime. And I love the candlesticks on these ones. Okay, guys, I'm a candlestick trader, guys. So I know the charts that have shitty candle bodies, that there's a lot of manipulation, and I stay away from those. Okay. So US 30, I use currency.com. NAS 100, I use Global Prime. Gold, I use Saxo. Bitcoin, when I'm scalping Bitcoin, I use Binance, this one right here. And then what's left? And then just some currency pairs, guys. If we're going to get more into currency pairs, like I know a lot of guys are asking about GBP, JPY, and we'll get into that. But indices move, guys. Market open, they move 100, 200 pips, guys. You could be in and out, make your money, and just get out and be done for the day. Okay. And I use like Oanda for currencies. Okay. So let me just go back to the chat box. Doug, hopefully that answered all your questions there.
Absolutely. Thanks.
Okay. Yeah, no worries. Let me just see here. Okay, sorry guys, Armani, can't wait. Yeah, okay, so the 1 minute candles, they're coming, guys, they're coming. We'll do private sessions with you guys for the 1 minutes, but for YouTube, we're not gonna give them everything. Okay, we're gonna slowly. We want 1K subscribers. Okay, we want to grow that YouTube channel. We kind of want to go trending. We want to be the best live trading platform on YouTube. Okay, that's basically our goal. Not for monetization. I don't give a shit about YouTube monetization. I don't even want, when we have videos, I don't even want those commercials. I don't even want that, because YouTube pays peanuts. I don't care about that. I want you guys, I just want them to start recommending our videos for people that want to learn how to trade. That's all we're trying to do. That's it. Because then we want to convert them into members with us so that we can trade live privately with you guys. But the only way that we can expose ourselves is on YouTube, right? Okay, so BB King, you are literally a step above anyone on YouTube. Thanks, bro. It means a lot to Dave and I and Blair. For real, it does. This is why we do this, guys. As long as you guys are getting value out of this, then it keeps us going, you know, because if you guys give me some feedback that it's not helping, you guys are not learning, then, you know, then we got to fix something. But at the end of the day, if you guys are learning and you guys are making money and you guys are learning on every single call, on every webinar, you guys are asking good questions, man, like, look at me. I haven't stopped today. I just did a one-on-one Zoom with a member who just signed up. And guys, we have that too, guys. So if you want a one-on-one Zoom, like for an hour with us, you guys are more than welcome. Just send us a message so that we could set up a time, and we'll dedicate like 1 hour to you guys, you know, to make sure that you guys, it doesn't always have to be in group sessions. We'll have that. We'll dedicate time to you guys. Okay. So that's there. Just message us. So we'll set up a time, because you guys are busy. We're busy, but we'll set up a time. No worries. There's enough hours in a day that we can dedicate an hour or longer, whatever it is. Okay. You guys are our members. Okay. Not just members, you're like family. So I want to make sure that you guys know what's going on. Okay. If I got to drill it in one-on-one with you guys to make sure you guys understand this, more than happy to do that. Armani, with a $250, what lot would be a lot size? Okay, so $250, you're not looking to get rich quick overnight. It's not going to happen. Okay, so $250, you're learning how to trade. So what you got to do is a micro nano lot. You're not looking for how much money you can make. Get that dollar value out of your head. Okay, because you're not going to make much with $250. Okay, if you go a higher lot size, you're going to blow up your account. You're going to lose that money. So what you got to do is you got to go like basically maybe 10 cents a pip. Okay, and you're looking to get pips. You're looking now, can you do consistently 10 or 20 pips per day? And if you start to do that over a week, 2 weeks, then you know that you're picking up trading, you're doing really well, and then you can start to increase your lot size a little bit. But with $250, you got to do micro nano lots, which are like a 0.01. It's 10 cents a pip. Like I said, you're not going to make you're not going to get rich overnight. But 10 pips is like $1 move. You could also go, if you feel comfortable when you learn this, you could go $1 a pip. Okay. But you got to understand, with $250, you have a 10 pip stop loss. You're willing to risk $10. Okay. So if it hits your stop loss, your 250 is going to go down to 240. But if we get you in a trade and you learn live with Dave and I, and you learn, we get those 10, 20, 30, 50, 100 pip runners on you could make $50 to $100 per trade. You can start to like compound your account 25%, 50%, 100%. That 250 could turn into 500, 700, 1000. Once we start getting into 1000, you can start increasing your lot size to maybe $2 a pip, and then we'll grow it, we'll compound it. But you guys got to learn how to trade first, okay? Even if you got to use a demo account, believe it or not, when I started trading Forex, I used a demo account for 3 months. 3 months I used a demo. I wasn't gonna put my hard-earned money into the market if I didn't know what I was doing. So I used a demo account. I grinded, I hustled for 3 months. I perfected, I back tested every single strategy. I got so comfortable where it was so easy that now when we trade live, it makes it's easier. So that's why like when I'm scalping gold, sometimes I go 10 lots. Okay, 10 lots on gold are, and I get a 10, 20 pip move. You can make $1,000, $2,000 and I'm out, you know? Like today I took a trade on gold, 10 pips, a 5 lot. I made $500. I scaled out, I took 4 lots out. I took $400 off the table and I left 1 lot as a runner. And then it continued to run another 200 pips. I took that runner out for 200. So it was a total trade of $600 in 15 minutes. Okay. I wasn't even looking to trade. I saw a setup and I took it. So that's all it is, guys. It's just, I'm not going to bullshit you, bro, but $250, you're not looking to retire. Okay. But you got to learn how to trade. Okay. So just believe. Patience.
I'm patient, man.
Yeah.
I don't care how long it takes. I just want to be the first in my friend and my circles to be a millionaire.
Bro,
you know?
but
That's
listen,
it. That's all I care about.
Bro, between all of us here, from Forex, I paid off my mortgage. I paid off all my cars. I paid off all my debt.
Yep.
I'm growing my account. I don't use funding challenge or FTMO. I'll tell you guys straight up. But if you guys want that, we will help you guys pass those challenges. Like my cousin Blair, okay, he exposed funding talent guys. He took them for $125,000. He was scalping Bitcoin with us, and they only paid him out 25 G's because they said that the scalping method doesn't meet their criteria. They're full of shit. They're you know, I told him get a lawyer and sue them, but he's just happy he got that 25K. So now what he's doing is he's not using those 5 lots. He's going to go like 1 lots and he's going to take them for 10, 20 G's a month and they'll continue to pay that out. But we cracked them, bro. We cracked that prop firm. So it's just a matter of time, guys. You guys are all going to be successful. Believe me. Dave and I and Blair are not letting you guys down. You'll see, you'll be trading live with us in these private calls. Like if you guys want to do like sessions just with us, guys, that's what we want to do, man. We want to trade with you guys. I want you guys to be like talking and with us and have real sessions, guys, where I can be myself, you know, because on YouTube, Dave and I got to watch what we say on there. We don't want to expose too many brokers and stuff like that. But on these calls, we can get real with you guys, okay? We can tell you guys the honest truth of how these markets work. And it's all manipulation, guys. Whether you're trading stocks, Forex, whatever it is, banks they're ruthless. They're ruthless. Like they don't like retailers. They want to take all of they're greedy fucks. They want to squeeze every single dollar out of just hardworking people. It's sickening what they do, but that's how our world works. That's where all the money is. They got the money, so they move the markets how they want to move it. So us, we're the little guys. Well, I'll be happy to just scalp a little bit. I'll eat off of them. But if I'm eating $500, $1,000, $2,000 a day, I'm happy. I don't need to. But eventually, you guys are going to start stacking your accounts, and you guys are going to get comfortable where you're trading standard lots, 2 lots, 5 lots, and then you guys are going to be making some good money too. Okay. So just remember, guys, it's a process. Remember, Dave and I didn't start overnight. I've been personally trading the market, scalping for over 20 years. Okay. I've seen it all. If I was scalping live in 2008 when we had the housing crash in the US, oh man, I would have gone viral on YouTube, okay? Because I exposed like everything. Look at these 1 minute candles. Oh my God, GBP USD is just popping right now. Guys, what time is it? 8:23. Okay, so I love to talk, guys. I'm really passionate about trading, and honestly, my main objective is that you guys learn and you guys make money, because we make money. We trade live. We trade with you guys. So as long as you guys are getting education out of this, that's all that matters at the end of the day. Okay. And you guys are welcome to ask any questions, guys, anything. Like, you can message us anytime. Dave and I will get, and in the chat group, guys, get in that chat group. We got a lot of experienced traders in there. They've done all the challenges. We got guys in the challenges that have passed elite. We got guys that just cashed out, so they can give us feedback exactly what goes on in there. Okay.
Excuse me, Ron.
Yeah.
So with my small account, would it be wise for me to just focus on one pair when you do your live trades? Like, I have to decide, okay, when you make a trade idea for US 30, NAS, or gold, I need to decide which one I'm going to trade.
Okay, so NAS, let me just show you. NAS and US 30, they run similar, like not exact, but they run. That's the US stock market. Okay,
Yeah.
US 30 is just the tech stocks, the biggest tech stocks, and NASDAQ has everything else. But they generally run in the same direction. So like, if you guys are trading in the morning with Dave during New York, you see when he sets up the NASDAQ and the US 30, you see how they go bullish, like they run in the same direction, but gold doesn't always correlate. So sometimes when he saw it today, gold was being choppy, he said, guys, stay away from gold. And then he got you guys in the US 30 and the NASDAQ sells and buys. So if you want to trade like simultaneously, maybe trade NASDAQ and US 30 together and gold by itself. Okay. But if you want to focus on one, like me, I love US 30. I don't know. That's just me personally. Over NASDAQ and US 30, my chart is on US 30. I don't know, because those are the big tech stocks. Those are the market movers. Okay. So they're the ones that move. That's where the money is. Exactly. Yeah, so if you follow US 30, NASDAQ kind of follows where the US 30 is going, but US 30 is the market mover. Okay. Because they got 30 of the largest tech stocks in this world, and they control the money. Like, think about it. When they're doing transactions, they're paying supply, like if they're buying suppliers, whatever, they're exchanging currencies, the trillions of dollars are going through the market, and it's all because of these top US 30 companies. So that's what dictates. And guys, I think US 30 and NASDAQ are going to fall month of August. We've seen today, but they can't sustain this. How, like with a pandemic around the world, how is markets continue going to all-time highs? It's going to pop. It's going to pop. I had everybody positioned when this happened in November of 2019, when I heard about the first case of COVID, when markets were at all-time highs. I went straight to my weekly, monthly candles. I saw that they were ready to take the big billionaires are ready to cash out. So what they got to do is they got to sell, but they need buyers. So they need to create fear in the market. Coronavirus, COVID started, and that's when they started. Like, if I show you weekly, monthly candles of February, March of 2020, you see a huge drop. But I thought it was going to drop more, but it just corrected itself, and then they propped it right back up. So we just follow the markets, guys. Follow the money. Okay, that's all we got to do. And then we break it down from daily to hourly to 15-minute to 5-minute, and we can even break it down to 1-minute candles. I think TradingView, when we buy the premium account, they have 30-second scalping. Guys, we can even drop it down to 30-second and 15-second candles. Like, shit's gonna get ridiculous. Lowry to the heat. No, oh man. Damn. Yeah, I'm a big Raptors fan, but MJ in the back, I'm always been a Bulls fan growing up, but when we got the Raptors, then I got to give love to the Raptors. But Kawhi Leonard, man, he did us dirty. I got no respect for that guy. He should have been there for back-to-back, but loyalty means everything. He gave us no loyalty. So, guys, yeah, Sunik, what's going on, bro? Victor, my man, Amayu. Am I pronouncing that right? Amayu. Okay, what's the outlook on daily for US 30? We'll do that on the call tonight, bro. So if you want to join us on when we go live in like 30 minutes, 20 minutes, we're going to take a break, guys. I just got to grab a drink, maybe smoke a blunt, and we're going to get on it. And can you please explain why funding talent doesn't pay out? It's not that they didn't pay out, okay? They're not paying out large accounts. They're not paying, they're saying, because Blair's in a Reddit group with guys that took over $100,000 and $200,000 this month, and no, but they sent them, like Blair sent in the chat group, he sent a response from the CEO. They said that their system didn't allow their copy because they weren't in trades for 10 seconds, but Blair was in trades longer than 10 seconds. Like, he held those things, but it's just, they're not paying out large accounts because they got cracked. The company would have gone bankrupt.
FTMO?
No, funding talent, bro. funding talent. Yeah. So they sent him an offer of 25K. I think that's just give them 25,000, and so that would get them off the hook, no lawsuits and things like that. I told Blair to get a lawyer and sue them, but he said 25K is good for months trading. He's happy with it. He's just going to now, and then they're paying out guys with like 5,000, 10,000 monthly with no worries. It's just guys that are hitting exposing them and taking them for all the money they're not paying out. And they got a little system that they have that they can get away with it. It's in their fine print that people don't read. But yeah, so just don't go wild. Just if you're in those funding talents, if you can make 5,000 a month and you keep 80% of that, it's good money. And then you can trade with $100,000 funded account, okay? Because you got to have capital to make capital, right? So like Armani, you're trading with 250, bro, but there's nothing wrong with that. But if you like, think about it, if you had $100,000, what you could do, you know? So you're grinding, bro. It's more respect what you're doing, because you're going to learn a real discipline. You're going to learn real patience, because when you take a hit, like $10, don't look at it as $10, but look at it as a percentage of your account. So you got to be now looking for the best entries possible. You can't be taking like impulse candles. You got to wait for those retests, those confirmations, bro. And I believe me, your account will start to scale, but it's just patience. Guys, I've been in these markets for 20 years. I'm telling you guys, just be patient. There's money to be made. Look at these 1 minute candles all day, guys, all day. There's money. Forex market is an ATM machine spitting coin at us. Okay. We just
I've blown 2 accounts, man. I've blown 2 accounts, and that was
yeah, it's an experience, but we've all blown accounts. There's not one person on this call that can say that they haven't blown account. I've blown up accounts. When I first started, when I transitioned from demo to real money, yeah, I over leveraged. I didn't study what lot size to really use. I didn't know, I had no mentor. I had no one teaching me this. I was just trial error. I was getting in, I had $1,000 account. I thought I was a baller. I was going in with a 2 lot. It went backwards on me. I didn't have a proper stop loss set, and right there, half my account was gone. And I started scratching my head. What the hell did I just do? You know, but you learn. Everybody makes mistakes, guys. Everybody in life, everybody makes mistakes, but don't worry about it. Just learn from it and move on, and never commit that mistake again. That's the best advice I can give everybody on this call. Okay. We've all been there. Believe me, there's not one person on this call that has not blown up an account. Okay. It happens, guys. But respect your stop loss. And then another thing that we're going to take trading more with you guys, we're going to teach you guys the psychology behind trading, how the money moves around the markets, how to control your emotions. When you get in a trade, look for confluence, guys. That's why I'm always looking for bearish, bullish divergence. I'm looking for higher time frame supports, those triangle breaks. So when I have all those things checked off, if I get in a trade, I'm confident. Okay, I set my stop loss and I'm good to go. If it taps my stop loss, I'm not going to cry at the end of the day. It's part of trading. But most of the time, my trades are up 80-90% profitable, and then they just start breaking down because I look for the higher time frame breakdowns. Then I collect 10, 20, 30, 40, 50 pips. If we get a real runner, like on a volatile session like New York or London, then you guys are just banking. You know what I mean? And don't get greedy, guys. Don't look to trade when you understand how this works. There was trades where I was scalping 24 hours, but it doesn't work like that. Just get in the volatile sessions, in and out, 60 minutes, 90 minutes, make 50 pips, 100 pips a day, happy, and just continue to do that daily. You get 2 sessions with Dave and I. You'll get a PM and an AM session. So, you know, you guys can hop on with us, learn, and guys, I want to see you guys successful. Everybody here. That's why we do this. Okay. We've been trading the markets. We know how it works, but you guys, we want to be like real mentors to you guys. We take that serious. You know what I mean? It reflects on us. So I don't want to put you guys in bad trades or give you guys bad advice because it looks bad on me, and I don't want that image. You know what I mean? I want to make sure you guys are learning. That's why we take time in these private calls. This is where you guys come with questions for us. If you guys took trades, screenshot the trades, let me let me know. Maybe you got tapped out, maybe you got screwed over on a head fake candle. I can analyze that and tell you where you went wrong. I can give you feedback so that you guys don't do that again. You know, that's what we're here for. Yeah, Doug, if you're interested on one-on-one, no worries. Just message us and we'll set it up with you guys. Anyone on the call, if you guys want a one-on-one, for sure, just let us know. And then if you guys want to come with questions, what do you guys want to know more about, just so that we can have a 60-minute session, and then we can give you guys good advice. But yeah, that's definitely for you guys.
Sounds great.
Victor, isn't that fraud? Yeah, you know, you'd think it's fraud, but they've covered their ass. You know, they have multiple lawsuits right now, so we'll see what happens in the next few months with them. But like the IML Academy, they got exposed. They were more of a pyramid scheme. They weren't teaching like traders how to really trade. There's just grow your team, and then the people above you continue to make money. And we have traders that came from IML, that academy, and they got no value out of there. And it was $300 US a month with a $300 registration fee. Like, that's a lot of money. That's why we don't, $30 a month. We want you to take money and fund your accounts. We want you guys to grow your accounts, not pay membership fees. And $300 a month is ridiculous. Like, what the hell is that? They're like, those companies are just, they're just killing people. Like, it's sad, you know. Like, I don't understand how greedy those billion-dollar companies can be, but they're like banks. They're like banks. Victor, 3 trades a day, that's it. Yeah, just be humble, guys. If you're getting 3 trades a day, you make your, I have a daily goal of pips. If I hit my daily goal, I'm done. You know, I know that I can make more, but I'm not greedy. I'm done. I want to spend time with my kids, you know, with my buddies. I want to chill out. I want to spend more time with you guys. Like, I could be trading right now, but I want to be doing more blogs with Dave. I want to do more tutorials with you guys, webinars with you guys. That's more, that means more to me than just trading, making money, because I know I can get in on right now, Tokyo session or New York session or London, get in, make my 50 pips. You got to understand, I'm using 1, 2, 3 lots, get in, make 1K, 2K, and I'm out. You know, sometimes I trade, guys. There's videos on YouTube that I show you with 10 lots. There was one 7-day stretch I took. I'll show it to you guys. I took 10,000 to 25,000 straight, and I'll show you guys the losses in the history. And I did that just by scalping the 1-minute candles with 10 lots. Okay, and it just right there, 3 times your account. Okay, and it can be done, guys. And I did that with $10,000 to show people you don't need to have $200,000 if you know what you're doing, guys. And I was willing to take risk. So remember, if I took a 10 pip stop loss, I was willing to lose $1,000. Okay, and it happened, and I got some red trades to show that, full transparency. But over time, if you're hitting 80% of those trades, I scaled that from 10 to 25,000 to show like snipers how I did that. So guys, it's not about the lot size. That's later on when you want to start making good money. But right now, you got to learn the fundamentals. You got to learn technicals. Okay, it's just like if we get in a basketball game, you got to learn how to do a layup, right? It's all fundamentals. LeBron James, Michael Jordan, got to learn how to do a layup. Okay, before you got a jump shot and all that, you got to start off with the basics. You got to learn candlesticks, guys. Once we learn the candlesticks, we move to support and resistance. Then that's now you can advance. Now we can start hooping. You know, then I can start teaching you guys order flow. I can teach you guys supply demand zones, accumulation distribution, areas not to trade, where we have breakout trades, breakdowns. That's where the pips are. That just comes with patience. Then guys, wait till we teach you guys the indicators, okay? Like the RSI strategy is just a basic strategy, but when we teach you guys moving averages, wait till we get you guys with Bollinger Bands, Fibonacci retracements, all of that stuff, guys. This is when stuff gets real fun. And then you use all those to meet your criteria, and you guys are gonna be like, trading is a joke. It's like, I taught my 10-year-old son, I can bring him down here and he can take trades live tonight on YouTube. Like, he'll run the session. Like, if I can teach a 10-year-old kid how to trade candlesticks, believe me, you guys are going to learn this. It's not complicated. It just takes time to learn, guys. They don't teach you guys this in school. They don't teach you guys this. They don't. We're training 5 bankers who work for TD and CIBC. Okay, they're financial advisors, and they don't know how to trade. All they do is they take your money and they'll put it in a mutual fund and they get a commission, but they don't know how markets move. Can you believe that? A financial advisor at our banks, they don't even know. I ask them questions, they have no idea what the hell I'm talking about. So, and then they see what we're doing and they join the team. And I respect that, you know, so they want to learn because they're not taught that, you know, they're just taught basics. This is, guys, we learn this raw. This is like, nobody taught Dave and I this. This is just from experience. If I tell you guys how I started trading, man, it was reckless. Like I started trading when I was like 18 years old. I was just buying a hype stock and I would buy it. And just, I didn't know what candlesticks were. No idea. I just heard that this thing was moving. It was going up. So I called the broker. Back in the day, it was, you had to get on a telephone call the bank. They charge you $50 for that call, for that broker at TD Bank to place that order. $50. So now when we're looking at commissions for like free or dollar, you guys don't know how it was back in the day. I had to pay $50, get on a phone for the broker to place the trade. And then he placed the trade. I wasn't looking at any candlestick chart, nothing. I just bought a stock. I didn't know what a stop loss was. So I bought something for $500. Next couple of days, I'm looking at it. My account was zero. I'm like, bro, I was 18 years old. I lost $500. Like that meant a lot to me. I had to work hard for that 500. Just gave it away. I didn't know what happened. I called them. I said, what the hell happened? They're like, yeah, you had no stop loss, this and that. So then I started looking, what the hell's a stop loss? I learned that you can put a stop loss to prevent how much loss you take. Then I started researching risk management, how much risk you're willing for reward. Then I started learning candlesticks. The Japanese invented these candlesticks in the 1800s when they were trading rice. Okay, Japanese are smart people. So these are invented and they're still on our charts. So these tell us real-time price action. They're there for a reason. So this is the money, guys. These candlesticks represent money. And all we got to do is just be patient and wait for the proper entries. And then we get in, we get out, make our money, and we just rinse and repeat daily, guys. And that's all it is, guys. So I'm happy, guys, that you guys are all in here. These webinars make me happy, guys, because the more people in here, then we can get into like trading. We can do like a webinar real quick, and then we can get into trading. But and then Dave and I want to come from limit the YouTube sessions for the live YouTube for all the freebies out there. And then we want to do more sessions with you guys. So we're just doing YouTube right now just to grow the channel. That's all it is. We want to get the 1,000 subscribers so that YouTube will start recommending us. We can get in their algorithm when people are searching for live trading and things like that. But we want to dedicate time to you guys. You guys are our paying members. We respect you guys the most. And we want to dedicate time. So, and then if you guys want some one-on-one time, just message us and we'll set that up. We'll do a one-on-one Zoom. I just did one with a member just before this call. No worries, guys. Dave and I grind. We hustle for you guys. Like we sleep 2 hours a night, but we're out there hustling just like you guys. Doug, my man, you're going to be a hustler. We're going to get everybody. Okay. I just want you guys to enjoy the journey. We want to be part of your journey, guys. We want to see your success stories. Believe me, we do. We want to be part of that with you guys. But if you guys have any questions about anything, message us. Okay, set up that live Zoom. If you guys want to do like weekends, whatever it is, just let us know so I can set some time aside. I can do mornings, late at night when my kids go to sleep. I can do that. No worries. I'm in the dungeon down here. I'm in the lab, so I'm in the basement, so I don't have distractions down here. But that's your time, guys. So it's 8:40, guys. We'll wrap this up. It's OSAP. Is that the name? OSAP? Okay, it's OSAP. Okay, OSAP, my man. OSAP, actually, but what is divergence? I'll teach you divergence live. We'll do it. But guys, watch our tutorials, okay? Believe me. The tutorials that we made, Dave and I made, there's no fluff in there. There's no BS, okay? We break it down like ABCs, like how they teach my son ABCs in schools to learn the alphabet. We've laid it out for you, very easy to follow. It starts off with introduction to candlestick characteristics, and it goes to bullish engulfing, bearish engulfing, hammer, shooting star. You get all 23 candlesticks. Then you learn how to apply those candlesticks to support and resistance zones. Then learn what an uptrend, downtrend is, a consolidation area. Then you can move into chart patterns. When Dave we tell you it's a descending, ascending, or symmetrical triangle. Then we learn patterns, head and shoulders, M and Ws. Guys, when you start to combine this with your candlesticks, it's easy, guys. This gets real easy. Then we start introducing all of the technical indicators, RSI, MACD, stochastics, Bollinger Bands, Fibonacci's. Then we teach you guys strategies like EMA strategies, then the bearish, bullish, divergent strategies. They're on there, bro. So if you check them out, you'll get they're all about 10-minute videos, okay? Press play, enjoy. It's my voice. I'm talking to you guys. Just teaching guys, it's got charts, A, B, C, D, easy for you guys to follow. Then it's got a back test video with live candlesticks moving. And then we got like a little tutorial of what's going on, okay? Just like how I went over on the webinar, exactly what they are. But guys, put your time into learning those tutorials, because then when you get on live calls with us, you know exactly what's going through Dave and I's psychology. You guys are ahead of the game. Those people on YouTube that don't know what we're doing, you guys know exactly. When I'm setting up my triangle candles. I go real quick, top down, daily, hourly, 5 minute, because I'm looking to get us real quick into trades. I'm setting up trend lines. I'm telling you guys, we got like an MW. You guys will know ahead of time what I'm looking at. And then guys, listen, this is what we want to do. When you guys understand this, you guys could be charting some other pairs on the side. Like someone could be looking at GBP USD. Doug, you could be looking at Euro USD. Armani, you could be looking at like Bitcoin. You know what I mean? You guys, and then when you guys see something happening, like a breakout, say, hey, Ronnie, Dave, check out Euro USD. It's about to break out. I flip to Euro USD. We get into a trade, guys. We can collect 10, 20, 30 pips. We can get multiple pairs, guys. You know what I mean? We don't always have to sit on US 30 and NASDAQ all day. Okay. When you guys get really good at trading, you guys are going to be charting yourselves on the side. And then just let us know, give us a heads up, and then we can flip to it. And also, guys, what we're going to have is I got just added on Streamlabs a second camera. So Dave and I are going to be streaming, both of us, with 2 cameras. So it's going to be like me talking to Dave. You guys are there in the chat. And then also we're going to have guest appearance. So if one of you guys on the call want to join us live, I'll be asking you guys questions, your journey, how you guys got into Forex, just talking with you guys how I'm talking now, but it will be live streaming. So if you guys aren't shy and you guys want to get live, we got 2 cameras now set up for you guys. So I'd love to have you guys live, man, with us, because I'm talking with you guys on YouTube, but I know you guys now by face. But just if you guys want to join us live, we're setting it all up for you guys. So we want to be the best live streaming Forex trading group there is out there. And I've seen what's out there, and it's suspect. You know what I mean? They trade like hourly candles. I'm like, where's the trade at? What are these guys doing? Like, I don't want to sit on a call for an hour and these guys are not just talking. I want to see some trades. Go drop to the 5 minutes, get me in a trade. But some guys are scared to trade 5-minute candles because it can backfire. You know, it's not easy to trade these, but when you learn how to trade them, then they look easy. Okay. Malkin, what's up, bro? Do we actually need so many strategies, or is only one? Guys, you see when I trade, what strategy do I use? I use one RSI strategy. That's all I do. And you guys see we make pips. You guys don't need to overcomplicate things, but there is guys that want to learn how MACD works, how Bollinger Bands, and we've used them all. Like, believe me, I've used every single technical indicator. I found out how to manipulate them, find them better that works for making the pips. Because remember, when you select Bollinger Band or MACD or RSI, you're getting the default entries that they give you, that TradingView gives you, Webull gives you, that the platform. No one says you have to use those default numbers. You can manipulate them that works better for you. So when I use RSI, you know how it's default 14, I dropped it down to 9. The candles were moving a lot faster. I was seeing that it was giving me more head fakes. I dropped it, I increased it to 21. I saw it was moving slow. So I like to keep it at 14, but I've trial and error. I've done it all for you guys. So, and that's the only strategy I use. Like Dave, he uses the 200-day moving average. He uses that big, thick yellow line, and he likes to see if price action is above or below it. But that's his strategy. Like, you guys don't need to overcomplicate. I see guys where they come on, they've got MACD, RSI, stochastics, they got Bollinger Band, Fibonacci's, I'm like, bro, what are you guys looking at? Like, I can't even see the candlesticks. You guys got so much, your screen is so busy. I don't even know what they're looking at, you know? So just keep it simple. Maybe max one technical indicator is all you need. But this is what you got to learn. Real-time price action, because again, it's real time. Technical indicators are good, but they're lagging. You guys got to understand that. They print after the fact. Okay. So for all those traders that are watching those, they're behind. I'll spot bearish divergence before it's even happening. We'll be on a sell on this bearish candle, and these guys will be starting to enter over here because MACD is starting to cross here, but we're already 10, 20 pips up in the trade right now when MACD is starting to cross below the signal line. So guys, it's nice when you're in a trade, but for entries, hell no, don't use indicators for entries, okay? Especially that RSI where guys are hitting sell at 70 and guys are buying at 30. That's crazy. That could set you up for disaster, especially when you're trading US 30, NASDAQ, or gold or Bitcoin, because banks don't care. Gold doesn't care if it hits 70. That thing can go 75, 80, 85, 90, it can run. So, and if you continue to hit sells, that's where you're going to continue to get stop loss. You can blow your account. Okay. So.